Good afternoon, everyone. My name is Zoninja. This is Eugene Shawa, Fane Karutu, and Grace Kaunga. Our group is presenting on the financial performance analysis of Blantyre Hotels Limited. This is an outline of how our presentation is going to go. We'll start with the introduction, then we'll talk about financial performance analysis, and then Eugene will take us through profitability ratios and liquidity ratios. After that, Fan will take us through activity ratios and gearing ratios. And at the end, Grace will take us through the limitations of the financial performance analysis and the conclusion of the presentation. So Blantyre Hotels Limited is a chain of hotels operating in the Malawi and hospitality industry. BHL owns Riles Hotels in Malawi. The company has grown over the years, and it was listed on the Malawi Stock Exchange in 1987. The main business for Blantyre Hotels is usually hotel accommodation and other related services like restaurants. So for our financial performance analysis, we are going to focus on the ratio analysis, which is more meaningful when assessed against industry standards and trends over a number of years. Now, what ratio analysis does is it examines the relationship between sets of financial factors that are expressed either as a ratio or as a percentage. So the most common categories of ratios, according to SCCA Management Accounting Paper of 2018, includes profitability ratios, liquidity ratios, activity ratios, and gearing ratios analysis. Getting this far, Eugene will take us through profitability ratios and liquidity ratios of Blantyre Hotels Limited in detail. Thank you.
Without wasting much time, I'll take you through the profitability ratios and the liquidity ratios. On the profitability ratios, we are saying this measures the organization's ability to deliver the profits. So from the financial statements for Blantyre Hotels, we'll be looking on profitability ratios. We'll be looking at the gross profit margin, return on capital employed, and the return on sales. For Blantyre Hotels, if you check their financial statements, the gross profit margin dropped from 57% in 2019 to 45% in 2020. This drop is attributed to the impact of COVID-19, which has had an adverse effect, especially on the hospitality industry due to travel restrictions and the social distancing regulations. And then on the return on capital employed, this also dropped from 7% in 2019 to negative 8% in 2020. And on the return on sales for Blantyre Hotel, it also dropped from 15% in 2019 to negative 34% in 2020. Our recommendation is that BHL must manage its quality assurance policies and also improve good customer relationship management initiatives. Quality services and relationship management will facilitate more sales. BHL must look to reduce the operating cost through, for example, optimizing scheduling of work and promoting remote work where possible. And then on liquidity ratios, as you already know, that this measures the extent to which an organization is able to meet their short-term liabilities. On this one, we have two ratios. These are current ratio and the acid test ratio, which is also known as the quick ratio. For BHL, the current ratio for 2019 was 0.98 to 1, while in 2020 it was 0.31 to 1. You are already aware that the ideal ratio for the current ratio is 2. In other books, they say that it should be 2 to 1. This shows that BHL Limited has been consistently below the common standard of 2.1 for the two periods between 2019 and 2020. The acid test ratio, which is also known as the quick ratio, for Blantyre Hotel is not as healthy and worsening over the period from 2019 to 2020. The ratio had decreased from 0.8 to 1 in 2019 to 0.3 to 1 in 2020. The ideal ratio for the acid test ratio is 1, others say 1 to 1. So in general, the liquidity ratios reveal that Blantyre Hotel does not have enough liquidity to pay off current liabilities as they fall due. Our recommendation is that there must be additional capital to solve BHL's liquidity issues. BHL must source long-term loans and issue of shares to the public to raise more funds to finance the current assets, at least to an acceptable ratio of 2 to 1, and pay off current liabilities in time to avoid accumulation of debts. BHL must also work on increasing their current assets using the capital and also make more advertisements, special offers and weekend promotions that could attract more customers who bring revenue in form of cash and improve their current assets. Thank you. I'll end here, and then my colleague will proceed on activity ratios. Thank you.
Good afternoon, everyone. I'll take you through activity ratios and gearing ratios as a continuation of financial performance analysis of Blantyre Hotels Limited. Activity ratios, they talk much of the ability to convert balance sheet items into cash or sales. That's according to Mirela in 2017. There are about 4 types of such ratios, which are asset turnover, receivable days, inventory days, and payables days. For BHL, the asset turnover was 177 days in 2019 and then 87 days in 2020. While on inventory turnover period, it was 73 days in 2019 and then 89 days in 2020. There was an increase of 16 days in that period. While on payables payment period, BHL didn't do well on this one. Their period in 2020, it increased to 3 years. They have to pay their customers, their clients, their suppliers, like in 3 years, which was too bad. And like in 2019, it was just a matter of days, which is 160 days. Now, in our group, we recommend the following for Blantyre Hotels Limited to do. First, we thought they should improve on their strategies that improved their turnover ratio from 177 to 87 days. So this could be done or could be achieved through skilled, experienced, and hiring of experienced managers, creative managers, I mean. The second thing should be application of differentiation strategies so that they should be able to attract more customers to their company. The third one should be to improve on their payment period. By one, discussing with their debtors how best are they going to pay them. We all know that negotiation is one of the ways of winning something. So if the moment they start negotiating with their debtors, they have started winning on this that is hampering them. And then on gearing ratios, they are much talking about the ability for an organization to meet long-term dates. Organizations get dates for them to continue with their daily operations. They cannot always operate on cash. It's difficult in competitive world. So we've got 2 of them called capital gearing and interest cover, whereby capital gearing is talking about financing the business. Now, in 2019, the gearing ratio was 4.4 4.67%, while in 2020 it was 4.668. Of course, there is a difference, but it's very minimal, of which it's showing that in 2020 it decreased. For interest cover, it was very hard for them, especially in 2020, whereby their net income finances costs, they were very high. So this suggests that the company may have invested interest-bearing activities which have been a good strategy under the circumstances of the ongoing pandemic, which is COVID-19. Then we recommend that the company should do the following to overcome the issues that they are going through with gearing ratio and activity ratio. One, they must issue shares to the public so that they can accumulate some money for them to cover up their debts and everything before they reach a point of being insolvent. The second thing is BHL, they made a loss before because they were failing to pay the interest to their debtors. In this case, they have been asking at least to minimize on the long-term borrowings. So, in the situation of not becoming insolvent, they are being asked to do at least 2 of these for them to improve. Thank you. I'm now leaving it to Grace to continue from where I have left. Thank you very much. I will take you through from limitations of the financial statement to conclusions. Limitations, these are the things which companies need to take into consideration before adopting the financial statement. Like here we see BHL, we've only used the financial information, we've not taken into consideration the non-financial information, which is also very important when we are analyzing the company. There are some other areas, like the way the company relates with the community in terms of corporate social responsibility. These are also the important things that the company needs to take into consideration before adopting the financial performance. The next thing is that of ratio analysis. We see that we use historical information. We don't use current information. And this historical information is coming from the cost accounting. And we see companies using different policies instead of using only one policy. So for the company to adopt the financial statement, at least it needs validations from the auditors. They need to examine the financial statement and get it audited, then adopt it. Otherwise, it might end up being useless. The other one is that of there is no standard formula, as I've already said. Different companies use different policies. And the last one is that of figures can be manipulated. You know, when managers are receiving pressure from the shareholders, they can just decide to manipulate figures, data, for them maybe to get bonuses. These things really happen from unprofessional managers. And lastly, in conclusion, we can see that BHL did not perform well in the year 2020, unlike how it did in 2019. It made some effort to lay off some staff, but it laid off some staff, and despite being in the COVID era, it still managed to acquire freehold land in Lilongwe to construct another hotel, new hotel. So that is an achievement despite the pandemic being in existence. In conclusion, all in all, the financial statement for BHL was not that good, but still the company is still surviving. This marks the end of our presentation. Thank you very much for listening. Questions?
Thanks so much for the beautiful presentation, but I have one question for you guys. Which differentiation strategy can attract more customers at Blantyre Hotels Limited?
Okay, let me take the question. In terms of differentiation strategies, we were talking about being different from the usual ways of doing things. So we thought that Blantyre Hotels Limited can be offering quality services in terms of giving out a unique experience to their customers. Whenever they have business with Blantyre Hotels, they have to receive an experience that they will not get anywhere else. Being in the service delivery, it is the service that they get that is going to convince them. So it is those that get the best experiences that are going now to give out an aggressive advertisement of the organization. The second point would be on low-cost delivery. We understand things are tough in Malawi, things are expensive, but then we don't have to charge exorbitantly. At least give out a reasonable price for the services that we are delivering or businesses that we are doing. That will make us sell more than just clinging to very high prices that are not affordable. I hope that answers your question.